All right, let's get right into it. We're going to unpack this incredible story of how one of the world's most powerful and, frankly, most secretive trading firms was accused of rigging India's stock market. And this isn't just about spreadsheets and numbers. It's a high-stakes game where millions of everyday people were, without even knowing it, pawns in a giant's master plan. And when I say high stakes, I mean it. The number at the heart of this whole thing is 5,000 crore rupees. That is the absolutely staggering amount that India's market regulator, SEBI, accused this company of making, not through smart investing, but through what they call deliberate market manipulation.
So what was this secret billion-dollar strategy? Well, it all boils down to a classic three-word playbook. A strategy executed with terrifying speed and scale, using super complex algorithms that could outthink and outtrade any human on the planet.
To really get what's going on here, you have to look at the two sides of this coin. On one side, you've got millions of people like Rahul. Let's say he's an Uber driver, makes about 25,000 rupees a month, and he's lost 2.5 lakhs this year trying to trade options. And on the other side, you have the quant giant Jane Street, a firm pulling in $1 billion from India in just 1 year. I mean, this is the definition of a David versus Goliath fight. So who is this Goliath? Who exactly is Jane Street? And what makes them one of the most powerful, and one of the most mysterious players in the entire world of finance? Let's pull back the curtain a little bit.
The secret sauce for Jane Street, well, it all starts with the people they hire. They don't just look for smart people. They recruit the absolute creme de la creme, the intellectual elite. We're talking about the top of the top rankers from the IITs, like literally the person who got All India Rank 1 in the JEE exam, working alongside graduates from Harvard, MIT, you name it. These are the geniuses building the code that trades markets faster than you can blink.
And how do you get these kinds of brains to work for you? You pay them an absolutely mind-boggling amount of money. I'm not even talking about annual salaries here. Their interns can make 50 to 60 lakhs per month. There was even a report about an IIT Madras student getting a full-time offer worth 4.5 crores. That's the kind of firepower they're investing in.
You know, their interview process is the stuff of legend. They throw these incredibly complex puzzles at you, like this famous dice game. And this isn't just a fun little brain teaser. No, this is designed to test how you make strategic decisions when you don't have all the information, how you calculate probability in your head. It gives you a peek into the kind of thinking that powers their entire global trading empire. Now here's the crazy part. This whole incredibly profitable scheme, it probably would have stayed a secret forever. But the whole thing unraveled because of a nasty legal fight between two financial titans and one very, very expensive slip of the tongue in a courtroom.
So here's the play-by-play. Two star traders at Jane Street build this secret money-making algorithm. They decide to leave and join a competitor. Naturally, Jane Street sues them. Now, in court, Jane Street is desperately trying to keep the location of this strategy under wraps, calling it one of their biggest secrets ever. But then, in a moment of pure drama, the other side's lawyers accidentally say the name out loud, India. And just like that, the cat was out of the bag.
And boom, a private corporate lawsuit suddenly becomes a massive international investigation. I mean, just put yourself in SEBI's shoes for a second. You're the market regulator, and you overhear in a U.S. courtroom that some foreign firm has a secret strategy that's making them $1 billion in your market. You'd probably want to know what's going on, right? Well, that's exactly what they did.
Okay, so to really get how this whole scheme worked, we need to understand the tools of the trade, the weapons they were using. And it really comes down to two things: the wild world of options trading and this lightning-fast computer-driven thing called quantitative trading. That's just a fancy way of saying they use math and supercomputers to make thousands of trades in the blink of an eye, catching tiny price moves that no human could ever see.
First up, options. Let's make this simple. Imagine you think a stock, say Lakshmi Lipsticks, is about to go to the moon. It's at 100 rupees right now. Instead of buying the stock, you pay a small fee, say 20 rupees, for a contract. This contract gives you the right to buy that stock for 120 rupees next month. Now, if the stock shoots up to 200 like you thought, you use your contract, buy for 120, sell for 200, and you've just made a massive profit on a tiny investment. That's called a call option.
So why is this so important for our story? Because India is absolutely obsessed with options trading. Just look at this. In the US, which has a huge market, options are about 70% of the trading volume. In India, it's an unbelievable 99.6%. For a lot of traders, it's not just a piece of the market, it is the market. And this stat just drives that point home. For every single rupee that someone invests by actually buying a share of a company, 400 rupees are being bet on derivatives like options. It's a level of speculation that's hard to even wrap your head around, and it turned the Indian market into a perfect hunting ground for a firm like Jane Street.
All right, this is it, the main event. We've met Goliath, we understand the weapons he's using. Now let's break down the step-by-step master plan for how Jane Street allegedly played the market and walked away with a fortune.
Here it is, the 4-step heist. Step 1. Pump. Their office in India starts aggressively buying up stocks in the Bank Nifty Index, which is just a collection of big banking stocks. This buying pressure artificially pushes the price up. Step 2. Lure. All the retail traders see the green on their screen and jump in. They buy call options, betting that the market's going to keep rising. But, and this is the genius of the plan, at the exact same time, Jane Street's Hong Kong office is doing the opposite. They're placing huge bets that the index will actually fall. Step 4. Dump. Once they've lured enough people in, their Indian office suddenly sells everything they just bought. The index tanks, all those retail traders get wiped out, and Jane Street's bet against the market pays off big time.
And the math behind this is just, it's brutal, but it's brilliant. See, they knew they'd lose money on the first part of the trade. They were buying high and selling low on purpose. They took a planned loss of about 200 crores. But that was just the cost of setting the trap, because the real prize was in the options market. Their bet on the crash made them a jaw-dropping 4,800 crores. So after you subtract their initial loss, they walk away with a cool 4,600 crores in net profit. So once the secret was out, SEBI did step in and take action. But after all the fines were paid and the headlines faded, was the problem really solved? Is this a story with a happy ending for the little guy?
Well, the resolution was efficient. SEBI issues an order and bans them from trading. Jane Street wires the 5,000 crore penalty. And then, just 10 days later, the ban is lifted and they're back in business. For a company of this size, a fine, even a huge one, can just be seen as a cost of doing business. So, problem solved, at least for them.
But that brings us right back to where we started, with the everyday retail traders. And here's the most sobering number of all, and this comes from SEBI's own data. 91%. That's the percentage of individual traders who lose money in the derivatives market. They are consistently on the losing end of this game, often playing against giants they can't even see.
Which leaves us with one last really big question. Sure, Jane Street paid their fine. One company got caught. But have the underlying rules of the game changed at all? For the millions of Rahuls out there hoping to get rich trading options, is the game any less rigged today than it was yesterday? That's the question we're left with.